crypto has become incredibly political in the United States. I was just listening to Trump's live address of the United Nations just now, and even though this wasn't about finance or crypto anything, it just kind of reminded me of some of the interviews that I've seen recently, and I want to talk about how things are moving in the background and what massive effects these might have on the price of XRP and crypto generally coming soon. Now, you know how sometimes we have Paul Atkins appear to be really, really positive about something, and then he goes ahead and postpones stuff or seems to change his view on things sometimes. Sometimes it's not just that he doesn't want to do these things, it's because he has to face a lot of opposition in the back. Turns out that crypto and blockchain, which is obviously fair enough because it's a paradigm shifting thing, right? It's a way we're moving away from the old system of money to the new system of money. So obviously the United States government, just like any other government, is very, very interested in this stuff, and it's a crucial thing, right? But it's amazing how this is being played as politics. It's similar to, the whole sort of Communications Act. I think it was how they were fighting over, monopolies and who could run social media and like monopolies and stuff like that. It's a big left and right issue now, which it should really be a bipartisan issue that they take on and move forward. How do we shift the country forward into this paradigm in the best way possible that benefits the country and benefits its citizens? Now, all these Genius Acts and all these legal things that are being, all these regulations that are being pushed in government, there's always some kind of anti-progress people in the back. I don't know how else to put it, right? For instance, there's this new czar that was hired for crypto and blockchain. Turns out that the opposition have been basically lobbying for him to be fired, saying that he has overstayed his role or has been there for too long. And it turns out that the amount of time that you're supposed to stay at the job on average should be 120 something days. This is in this video, so I'll just play this video. There's two things I want to talk about. There's also our best friend, Gary Gensler. Turns out he's still a bit of an influence on decisions that are being made on crypto. Let me just play this video and there he is.
Other progressive lawmakers in sending a letter this morning asking Sachs to account for how long he'd been at his post. Sachs was designated a special government employee, which comes with a 130-day limit for the job.
130 days,
Those Democratic lawmakers say overstaying that limit would raise additional ethics concerns as the Trump administration pushes for more changes to crypto regulation. A spokesperson for David Sachs says he carefully manages his special government employee days to stay under the 130-day limit. You can check out the full story over at CNBC.
Okay, so, they can't wait for him to leave. He's making too many moves. He's making too much change, maybe too quickly, that people are unhappy about. There's also some other guy I want you to listen to. You might recognize this person.
Space.
For investors, everyday investors, the 5 to 10% of Americans who invest in crypto, and it's hard to get the real, but that it's a highly speculative, very risky asset. And in most of these tokens, put aside Bitcoin, but most of the other tokens are not tied to any fundamentals. And there's 5 or 10,000 of these tokens.
When asked about the enforcement action.
Okay, so just before he says the next thing. So basically what he's doing there, he's raising concerns over altcoins amid agencies' crypto pivot. So he's agencies that he used to be the chairman of, the SEC. Now under the new SEC Chair, Paul Atkins, he's not happy that obviously they've been termed not securities. They're not being hunted down in the same way that he was hunting things down. But not, this is the thing. If he really had true concern for, those, the majority of the traders that he's talking about, the holders, the retail people, then his job would have been to provide, basically do what Paul Atkins is doing now, to provide clarity to these organizations so that they can properly be managed, controlled, and regulated. But instead, he was duplicitous, evasive, and then he'd wait for them to innovate something, and then he'd go after them and tie them down in legal battles, most of which capitulated, with the exception, of course, of Ripple, who basically stood up to him. Library also stood up to him, and Library actually won, but because of the legal cost, they crumbled because they weren't big enough. Now we have Ripple, which is a big organization, which was big enough to stand up to him.
Taken under his leadership, Gensler affirmed that he believes it was the right decision and mentioned that his predecessor, Jay Clayton, also brought forward many cases in the field.
We were consistently trying to ensure for investor protection. And in the
No,
midst
you
of it,
weren't.
we had a lot of fraudsters. Look at Sam Bankman-Fried, and he wasn't alone.
Okay, so that's he shot himself in the foot there, right? So he was supposed to be protecting the investors. The investors still lost a lot of money, right? The investor lost money. SBF made a lot of money. Now, he should have prevented SBF in the first place. He should have prevented a Do Kwon in the first place. But instead, Do Kwon flourished, SBF flourished, and the retail market that he was supposed to be protecting, they lost money. So he has failed in the very task that he's laying out. Or he failed anyway, rather.
Now, many in the industry celebrated Gensler's departure from the agency when President Trump took office. The crypto community criticized Gensler for his regulation by enforcement approach, and many of the cases have been resolved or dismissed under current Chair Paul Atkins.
Exactly. All right. I'm going to show you one thing that really annoys Gary Gensler, right? This is one of the things that we're talking about here. All right. So this segment of the video, he talks about a lot of things. I'm going to leave a link to these videos in the description if you want to go ahead and watch them yourself. But in this video, he talks about several things, including the ability to include crypto in 401ks, in retirement funds, etc. At the moment, he talks about Bitcoin, but he also talks about, other coins, other funds, other companies and their stocks that can be included even though they dabble or are based around crypto. So that's actually quite interesting. And this is one of the moves that he made, along with, obviously, the new administration that, Gensler was not happy about.
My question is, if you're 20 or 25 years old and you get to own something for 20 or 30 years, you don't need it to be liquid. But by the time you get to retirement, boy, do you need that liquidity. And so if you get to a period of time where, for whatever reason, things aren't liquid, what do? And you create this almost secondary or tertiary market where people are basically liquidating different investments to create that liquidity. Is that a good or bad thing?
Yeah, well, I think that's a good point, and all these issues need to be worked out. And so the one thing, if there are various types of funds, some geared for investors to hit their retirement age or to plan for the future according to various decades of their lives, and then to be able to pass down some of these assets perhaps to the next generation. So
exactly, that's a crucial thing that he said there. So some of you guys hold them forever. So yeah, you're going to hold forever. You're not going to sell at any point. You're going to use that to be your passive income generation. It's going to be in your retirement fund, etc. But when you do pass away, the ability to pass that on to future generations, to carry on supporting them in terms of generational wealth, that is a possibility that should be something that you can use crypto for without having it demonized or taken away from you or taxed out of your pocket in the way that Gary Gensler and his people would be happy to do. Anyway, not financial advice, not legal advice, not political advice. Do your own research.